Coming up on today's episode, the NASDAQ snaps an 8-week winning streak on a potential topping formation. June is on track to be the busiest month in the options market ever. The stock Warren Buffett keeps loading up on. Bitcoin breaks out above 30,000. Manufacturing PMI comes in much weaker than expected. More weakness in Europe and other major economies. The week ahead, and the trading strategy I developed on TradingView. Welcome back to Click Capital, everybody. I hope you're having a great Friday or Saturday, wherever you are in the world. And we just finished this shortened trading week on a bit of a soft tone, with all the indices putting in their first down week in over a month and 2 months on the NASDAQ, in what's been a bit of a shallow and orderly pullback so far. And just looking at our new sector trends table indicator, we can see we've got a bit more red today in the immediate trend and a few more red boxes in the short-term trend. And so this indicator just looks at where the current prices of each of these sectors in relation to the 5, 20, 50 and 200-day moving averages. And we can see it's only healthcare and home builders that are still on uptrends in all time frames. And now we've got utilities, real estate, energy, clean energy, regional banks, oil and gas, all in downtrends across all time frames there. And we've now got the NASDAQ equal weight index closing below its 50-day VWAP today. And so will we continue this orderly pullback we're having, or will we see some more acceleration and maybe a bit of a rug pull next week on the back of this weaker economic data we're getting out, in conjunction with the hawkish Fed who says they're going to keep on raising rates? We'll get into that a bit later on, so stick with me today, and I'll get you up to speed with all the most important news, data and charts out from the markets today. So a bit of bearish breadth across the board here, just a few small pockets of green scattered throughout the sectors. And we saw some of the biggest names come off today: Tesla, NVDA and Microsoft, all coming off a bit, along with some other semiconductors and software names. And so we're really technically due for a pullback after being in these overbought levels for a couple of weeks now. And the market may have got a little rattled today with the Manufacturing Purchasing Managers Index, or the PMI as it's known, in June came in at 46.3, and that's down from 48.4 in May. And so anything below 50 means that the sector is contracting. And so here's a look at the ISM PMI, which is a very similar index to the one we just got today, and one for which we've got a lot more data on. And so the current reading at 46.9 in contracting territory. I put a horizontal line on the chart, and shaded in the grey are the times the US went into recession. And so this indicator has a bit of correlation with recessions when we see manufacturing contract. And I'll just take you back throughout history. Whenever that level goes below where we're at now, quite often we go into recession. So we can see a bit of correlation with the PMI and recessions. And once again, just another indicator that a recession is just around the corner. And with all these indicators, especially the deeply inverted yield curve, it would have to be almost a miracle for the economy not to go in a recession in the next 6 months or so. And this time would truly be different if it didn't. And this is on top of more signs of weakness in the global economy, as the Eurozone's composite PMI also dropped to 50.3 in June, on the verge of contraction as well. And these numbers, along with the US PMIs, caused global bond yields to drop today. We also got business activity in Japan slipping to a 4-month low, and their manufacturing index as well is in contracting territory at 48.4. The UK economy is losing momentum as well, with their purchasing managers index declining to 52.8, and still a little bit higher than North America, Japan and China, a bit on a downtrend. One of the other largest economies in Europe, France, probably saw a 0.5% contraction in the second quarter, and their PMI dropped to 47.3, so that's in contraction territory as well. And so with all signs pointing to a global recession on the doorstep, here's a monthly chart of the NASDAQ, and I'm wondering to myself, is this the shorting opportunity of a lifetime, or is the AI craze going to continue to overwhelm everything else? And apparently a lot of people out there disagree with me, because we've seen one of the busiest months in the options market on record, with June on track to be the heaviest month of call buying since November 2021, right before we topped out. And that's because we have a lot of people betting on mega cap tech to continue melting higher and higher. Even though it was a quiet day in the options market for a Friday, just under 38 million contracts traded, we did have 55% of them in calls. And out of the volume, 63% are set to expire in 5 days or less, and half of all those trades are done by retail and small traders. So while corporate insiders continue to sell a lot more stock than they're buying, as they have done this last 2 months, we continue to see retail load into call options of the biggest stocks out there. And even though we've had a bit of a pullback in the indices this week, that option buying is what's keeping the fear and greed index elevated just below the extreme greed zone at 74 today. However, all that bullishness is in the face of global central bank actions. With sticky inflation around the world, central banks are still committed to hiking rates. That's why we saw the surprise 0.5% hike from the Bank of England a couple of days ago, along with a few other European central banks hiking as well. And with those business surveys and PMIs coming off around the world this week, it could be that the rate hikes we've seen earlier this year are starting to bite into the real economy. And the most recent hikes have yet to be seen what they're doing to the economy. And Fed Fund futures have priced in a 72% chance the Fed will hike when they meet again on July 26. Dark pool traders are still hanging in there though, with the DIX index in slight bullish territory at 49%. Another news out today, we saw Virgin Galactic stock dive as they took advantage of the elevated price with it. News they're doing a secondary to the tune of 400 million. And here's a quick look at the stock chart of Space. And you'll see that often in meme stocks that are not making any money, they'll take advantage of these pops and sell more stock to the market to try and replenish their balance sheet and keep them going a bit longer. And so we did get a bit overbought a few days ago, and then we've come off a bit hard today, down 18%. And I think maybe this might also have something to do with the failed mission of the Ocean Gate Titan sub going down to the Titanic, and may just cause wealthy tourists to think twice about these extreme tourist experiences, and Virgin Galactic being one of them in the very nascent industry of space exploration. And Warren Buffett has been loading up on shares of Occidental Petroleum, with his holding company Berkshire Hathaway having a quarter of the company of Occidental. And I can imagine when we get the next filing, we'll see he's loaded up on more shares as the company continues to dip in price with the price of oil coming off as well. And just looking at OXY on the daily chart here, it is looking a little oversold. We put on a spinning doji today with a bit of volume. The DSI is really oversold at negative 11. And we can see the downside momentum in the stock is stored on the rating strength here at 11.4. And sitting at this support level where we bounced back in May and in mid-March as well. And our fundamental indicators really like this as well. We've got fair value way above at 295. And the business quality score at 33.4. However, the biggest driver of the OXY stock price in the short term is the price of crude oil futures, which has been weak for the last couple of months, as we've seen the major economies in the world, China and Europe, have a bit of weakness here. It has found support at this mid-60s level. We sold off today only to finish the session after a bit of a dip buy, and we'll be looking for oil to hold this mid-60s level in order to keep those energy stocks like OXY propped up as well. The bullish momentum in Bitcoin continues today. We actually found $31,000 a coin, and it finished the week up 17%. And this latest rally has been spurred on news by BlackRock, the world's largest asset manager, filed an application with the SEC for the first spot Bitcoin ETF in the States. And BlackRock has a record of getting over 99% of their ETF applications approved. So one would assume that they do get this one approved, which is fundamentally really supportive for Bitcoin as a legitimate asset and allows big investors to put an allocation to Bitcoin safely in their portfolios with a regulated, transparent, and liquid ETF that BlackRock will administer in partnership with Coinbase as the custodian. And here's the weekly chart of Bitcoin. So we're coming back up to this resistance zone here around 30,000. Currently sitting above it just a bit here. And technically speaking, the market really needs to push up above this level and close above there, so we can then turn this resistance zone into a support zone. Otherwise, in the short term, we are overbought a bit here. The DSI is in the overbought zone. We are above the buy-sell band, and we'll just be seeing if that fundamental news is enough to push it through technically through this level. As sometimes failed overbought signals can become powerful signals in the other direction. And just looking out to next week, we've got earnings coming out from cruise liner Carnival, and I'll be watching that as I have a short in their competitor Royal Caribbean Cruises. We've got a few more earnings out later next week with Nike on Thursday, Micron on Wednesday, and a bit of economic data with durable goods on Tuesday, mortgage applications Wednesday, and the ones we'll be really looking at is Thursday, core PCE. We'll be looking for initial jobless claims to see if they keep rising, and then some personal income and spending data on Friday to finish the week out. Okay, back into the charts, and before I run you through the price action across the board today, I just wanted to quickly go over with you the latest indicator script I made on TradingView that's going to be available as our special deal offer on our package of indicators next week. And this indicator, which doubles as a complete trading system, is called Buy the Dip System, and it runs on any asset, any time frame. Basically just looks for assets that are in an uptrend and seeks to buy the dip. And as I showed you guys yesterday on the chart, ever since we've had the Fed put era, whenever markets get bad, the Fed will step in, drop rates aggressively, buy assets aggressively, expand their balance sheet. So the market kind of always has an insurance policy to lean against. Buy the dip strategy has been profitable, and its profitability is increasing over time. And so I stayed up all night and coded that into a profitable strategy, and its results were quite surprising to me. It is actually robust across the board. And you can see that in the strategy tester built in with TradingView. which this script works on. And so this is on the daily time frame on the NASDAQ, but like I said, you can run it on any asset, any time frame, and the system is highly configurable. You can change all the settings from how deeply oversold it has to get to back to overbought when it exits. A trend filter, so you only take trades when the market is above a certain moving average. A momentum filter, so that if the asset has to be up by a certain percentage, can help. An index filter, so that only takes trades if the index is above a certain moving average. And different types of stop loss. You can have an ATR, percentage, or both, whatever one's hit first. And you can backtest all the way as far back as you like, actually. And so here's just a quick look at some results on some popular stocks. And this is for the last 20 years. So this is on Apple, we had 70% profitable trades. This is JP Morgan at 64% profitable trades. And this system can work in a sideways market as well. That's because it always seeks to buy the dip, like you can see these blue arrows here. And then it's a swing trading system, so it'll exit a few days later. There's Microsoft, 65% winning trades. And like I said, it can work on other time frames as market as well. Here's a 15-minute chart of Google and in 64% winning trades. And if you have an account with interactive brokers like I do, you can actually use the service Capitalize.ai, absolutely free, to automate TradingView indicators like the ones I offer, to send trades straight into your IB account, 100% hands-free, so you can run these scripts completely automated. And with all my custom indicators on TradingView, you can set up real-time alerts. Whenever the indicator signals something or goes over a particular level that you like, on any asset, any time frame, you can have an alert sent to your email, phone, SMS, pop-up, whatever. So you never have to miss a trade or an exit signal. And like I said, stay tuned into next week because I am releasing 7 new indicators, taking my total package up to 20 custom indicators that I use myself every day as well. And I'm going to offer you guys a 1-week special deal on all 20 of those indicators, including our latest one, the buy the dip system. Okay, back into the charts. And like I said, we've got the equal weight NASDAQ now closing below its 50-day VWAP. But it has been quite the orderly pullback so far. We have not had that rug pull or managed to have a decent down day. Seeing the market down 2% or more seems like a thing of the past. However, we do have some pretty good bearish divergences building in the market here, we can see on our indicators. And so we'll be looking if we can get some follow through next week. And typically we get those big down days when the market's already moving down and we just see that acceleration to the downside. International stock indices are already pulling back harder than the American ones. We've already got Canada's TSX into oversold territory and a bit of weakness out there as well with the FTSE and DAX below their 50s and the Nikkei just going below its 50 yesterday, and the Aussie and the China coming off as well, back down to multi-week lows. And in a change compared to a couple of months, we actually saw the VIX tick up to finish the week out on a Friday, but still super low down here, 13.4. Breadth as well had a bit of a pullback. We've only got slightly more than half of stocks above their 20-day, 50-day and 200-day moving averages. And again today we saw the amount of stocks making new lows on the NASDAQ outpace the amount of stocks making new highs. Growth versus defensive spread still holding up a little bit, and small caps versus large caps really back down to this low support zone here. We really need this level to technically hold for a chance at small caps to continue outperforming large caps like we saw start a couple of weeks ago with these up moves here. There's a look at international developed stocks versus American stocks. We can see that's been pretty weak this last month or so and found new lows again today. And the 10-year, 2-year yield curve comes back down to all-time record lows as bond investors price further economic weakness out in the future, marking down the 10-year yield, while we'll still have the 2-year yield a full percentage point above it because the market's still pricing in the Fed hiking in the short term. And we can see that in the price action of the 2-year yield there, still at 474, and the 10-year bit more flatter at 373. Those lower yields are helping TLT stay propped up, finding new monthly highs today, with the high yield bond trading a bit more weaker below its 50. There's a dollar index with some really nice technical action bouncing off this support here. Did get a bit of a bullish divergence, and generally speaking, a stronger dollar is a bit of a headwind for all risk assets, including commodities. There we have the commodity index tracking fund bouncing around again in this sideways movement we've seen for the last couple of months. And there's a look at gold that's been drifting a little bit lower, but seems to be finding a little bit of support here. And the better performing commodities of late, copper, agricultural and uranium, have all had a bit of a pullback this week. There's a look at the cannabis ETF pulling back a bit here today, still trying to find support in this area. And look at that, before you know it, the AI ETF bots is right back at its 50. Let's see if we can hold above that next week. Same with semis as well, they may test their 50 next week. And clean energy just lost its 50 today. And looking across all 25 plus sectors that I track, it was red in all of them except home builders. Managed to hang on to a little bit of gains here today, but we are overbought up here, and a bit of weakness back in the regional banking sector along with REITs. There's a look at one of the best trending sectors, healthcare, just holding up, but utilities not much so. So as you can see from all those sectors, we still have a bit of sideways and weak movement out there. Tesla came off a little bit today and put on an inside pattern here. NVDA as well, down almost 2%. Apple actually found new all-time highs today, but closed lower than yesterday, and Microsoft's still a little bit weak. Amazon found new highs as well, but couldn't finish there, and Google sitting right at its 50-day. And Meta was the winner today, finishing on its highs with volume as well. Maybe the market's pricing in a win from Zuckerberg as he potentially goes to fight Elon Musk in a cage, in what could be the biggest fight ever in the history of the world. And I really hope that goes ahead, because that would be really cool thing to watch, two billionaires actually fighting in a cage. And I wouldn't rule out Musk so quickly either, even though Zuckerberg is currently in better shape and has been training for a little while now. Musk does have the size advantage over him, and I'm sure he would hire really good trainers to get him prepared for a fight against Zuck, and he would love nothing more than to knock out the Zuck. So hopefully that goes ahead a bit later this year. Back on the charts, and we saw C3 AI close down another 10% today, and a bit more weakness out in the meme space. Active today was Under Armour, which got downgraded. More weakness in Starbucks as they continue to have troubles with the unions. Goldman Sachs comes off as they write down their Green Sky deal. CarMax rallies 10% as they absolutely smoked expectations by 82%. Stock market leader SMCI comes off another 4.5%. There's a look at one of my shorts, Royal Caribbean Cruises. Like I said, we got earnings out on Carnival on Monday, so that's probably going to get these stocks moving in either direction. But there's a look at the weekly chart of Carnival Corporation, Norwegian Cruise Lines as well. And you can see the weakness in these stocks compared to the strength in Royal Caribbean Cruises, which I'm short. And we just put in an 11 count on the weekly chart here with our DSI indicator at 18.1. Indicating we are super overbought up here. And I'm looking for this resistance zone to hold. And if I can, I plan on to hold this short for many more months and would ideally like to sell it really deep into a recession. So I am going to give it a bit more wiggle room. We may see above $100 next week. And I'll just have a look at Carnival's results and their guidance and what they have to say about the industry as a whole before I make any further decisions on my short and RCL. If I like what I hear and we see RCL above 100, I may add to the short. However, I'm not sure yet. We'll just have to wait and see. And finally, we've got all the major banks back below or testing their 50 days. Okay, that rounds out this shortened trading week. And I finished out the trading week with the portfolio tilted 32% net short. So I'm keeping that moderate bearish tilt here. Of course, the macro backdrop continues to degrade around the world. However, I'm still suspicious of this market. I think when we do get the dip, it'll just be bought right back up. The major algos are programmed to lean against the Fed put every single time. And it's what makes shorting this market so hard. And that's pretty much been the case ever since the Fed opened the floodgates on asset purchases back in 2008. And that's part of the reason why I built this buy the dip system that we can run on TradingView. Because if the Fed put is always going to be there, then I want to be able to take advantage of that phenomenon. In a small way, but overall I am still bearish medium term. I still think all the indicators are not going to be different this time. We will get the bear market, we will get the global recession, and a lot of these overvalued, elevated stocks will come back down to reality. But probably won't stay there for long, because by the time things get really bad, then the Fed put will kick in again, and the big dip that we get will be bought. Alright guys, that's it. Thanks very much for staying with me. And I'm excited for next week because I'm going to offer you guys all my 20 custom indicators for TradingView in a great deal. That includes all future indicators that I develop as well, along with my ongoing support and no ongoing costs or anything else like that. So I think a lot of you guys are really going to like that one. All right, guys, have a great weekend and see you again Monday afternoon. Cheers.